According to the latest CPI report yesterday, food prices climbed 0.2 in July. Our next guest owns 4 restaurants in Georgia and says his grocery bill is up 20% due to food inflation. Joining us now is Brian Will Restaurants Investment Group founder and CEO. Brian, it's actually crucial to have you here right now because we're hearing that Kamala Harris might go after groceries for price gouging and so on and so forth. So we're eager to try to figure out what's going on with food prices across the economy. And what's your take?
Good morning, Kelly. Yeah, and it's funny when I hear pricing is only up 2 or 3% on something, because I can tell you in the last 6 months, when we look at our cost of food in February versus our cost of food now, it's more like 20% and as high as 40% on certain items. So I'm not quite sure where they get those measurements from, but it's not what we're seeing out here in what I call the real world.
Sure. Can you be specific about where you're seeing the biggest increases, feeling the most pain?
Yeah, I'll give you a perfect example. The cost of chicken in February was $1.64 a pound. Today, that cost of chicken is $2.27 a pound. That means our cost of chicken has gone up 63 cents a pound, right? That's a 38% increase. And people say, well, 63 cents might not be that much until you think that we buy 62,000 pounds of chicken for our restaurant. So my wholesale cost on chicken for the year went from $100,000 a year to $138,000 a year. That's $38,000 that hits my bottom line.
Right.
Now look at the cost of beef and the cost of cheese and the cost of seafood, and those numbers start adding up very quickly.
How does it compare with a couple of years ago, though? Because my understanding was chicken prices skyrocketed. Then they actually came down quite a bit. They've been on a rebound lately. But in other words, we're starting from February through the summer of this year. But put that in the broader context for us. What were you spending on food a year ago, 2 years ago?
Chicken does vary a good bit. But I can tell you that my wholesale cost, when we look at in a restaurant, we look at our food cost. I can tell you 2 years ago, we tried to run a 27, 28% food cost across our entire menu. Today, we're running a 32 to 35% food cost. So you're talking about a 5% increase overall on the cost of our wholesale goods. And when you multiply that out, it costs a $5 to $6 million operation. It starts adding up very, very quickly.
Do you think there's price gouging? So when you're with the suppliers that you deal with and the prices that you have to pay, do you feel like that's what's going on?
It's a tough question. And I had this conversation with somebody last night because we buy food at what's called a cost plus. So I pay 6% over theoretically what my supplier pays for it. But I don't really know where they're coming up with their costs. So are they price gouging me? I have no idea. But I'm on this dynamic pricing, so my pricing does change. And there's not a heck of a lot I can do about it.
Right.
Well, what about consumers' response to all this? What are you now finding in terms of their willingness or their ordering patterns, things like that?
You know, we've done 4 price increases in the last 2 years. And at some point, you start seeing traffic drop off in the restaurant because people are shocked when they come in. I did a segment about 6 months ago where our bacon, lettuce, and tomato sandwich now costs $17. People come in and they say, oh, my gosh, $17. Our average ticket price on a table is now over $50. So how often are you going to come in and sit down for a meal that's $50 or $60 when you can make that same thing at home significantly less? So, yeah. We only have so much room to raise prices before people stop coming in.
I thought that was interesting when we looked at results from Chili's yesterday and some of the restaurant chains, which had been losing to fast casual and fast food, they're clawing share back because they're able to discount now and offer like a $10.99, multi-meal value option and things like that, which I have to imagine puts a lot of pressure on you. Now, I don't know if they're taking margin in order to do so, but I do think, generally speaking, disinflation compared with a couple of years ago is giving them that opening, and they're seizing it.
Well, I think you hit the nail on the head in an earlier segment, too. Even we are experiencing what we call shrinkflation by adjusting the ingredients in each one of our hamburgers. They can do it by, instead of 8 ounces in a hamburger, they go to 7. Instead of 6 ounces of chicken, they go to 5. So they can dress it up and make it look the same. But the reality is the core ingredients are shrinking the amount that we're putting in there, which lowers our cost, which allows us to lower the menu prices.
And just in kind of one final question on this, but I've always understood the mix in restaurant world might be half or more is labor, a smaller portion is actual food costs, even if those are up. And we know there's been massive labor inflation. Some of that's policy driven, some of that's shortages and so forth. What are you experiencing, and how does that cost compare with the price of actual food when it comes to what you're charging people?
Yeah, our food cost runs about 32%. Right now, our labor cost is running about 30%. So those are the biggest 2 items in there. And in our case, we're having to cut labor across the board to stay within our 30% labor cost, but have less people doing the same amount of work. So in order to combat the increased price in the food, we've got to cut back on the number of people that we're actually hiring in order to serve that food, to try to keep those costs in line and keep our profits where they need to be.